Right, part one of the question asks you to calculate profit before tax. The trial balance includes income statement information separately, so you shouldn't struggle to do this part of the question. Literally pop down the given information and then do any adjustments that are required. You may be required to do a few calculations, and that's fine. Do separate calculations, pop the answer into your calculation and get your PBT. 6 or 7 marks, no format, no presentation, should be easy. We are calculating PBT. So we start with revenue, and what I'm going to do is I'm going to just jot down everything that we are going to be doing first of all. So we've got revenue, cost of sales, got dividends received, and we've got interest paid, and then we'll have other operating expenses, and we're probably going to have to make a few adjustments to other operating expenses. This part of the question is probably worth about 7, 8, 9 marks, and quite a few of those marks will just be from putting the given information down, so it's quite easy to earn marks. So we pop down revenue, 15,957 000. We subtract cost of sales, 10,500 000. We add dividends received, 678,000. We subtract interest paid, 452,000. And we subtract the given other operating expenses, which is 3,982 000. And that was the given information only, but there were adjustments. So what we need to do is we're going to need to do a few additional calculations and then get those answers and put it into this calculation. For example, depreciation. Remember, we've got to provide depreciation on the buildings, the plant and machinery, and the right of use asset, the motor vehicle. So I'm going to go to another worksheet and I'm going to do it on a separate worksheet. Okay, so let me do depreciation first because that's the most complicated one. So depreciation, plant and machinery. It was quite straightforward. You were told it was being depreciated over 10 years. So quite simply, the cost divided by 10, 312,500. The factory building, remember this one, we're only depreciating for 6 months because it was transferred to IP halfway through the year. So 1240 000 times 5%, multiplied by 6 over 12, and that comes to 31,000. And lastly, the motor vehicles cost, including VAT, 1,596 000, and multiply by 20%. It was a full year, so no apportionment. So 319,200 is motor vehicles, and that gives us a total depreciation of 662,700. Now that calculation probably is about 3 marks, and let's face it, it's a fairly standard first year depreciation calculation, so you should be able to nail the 3 marks very easily. So 662,700, we then subtract from our PBT. Then we do our fair value adjustments, and that was on investment property. These adjustments are quite straightforward, so I'm just going to pop them in a calculation in brackets. Remember, this fair value adjustment is going to be once the property becomes investment property. So it's the fair value adjustments between December 2018 and June 2019. So you use those market values. So the land was 220,000 at year end, minus 200,000 on 31 December 2018, and the building is 1350 at year end and 1300 on 31 December 2018, giving combined fair value adjustments of 70,000, and it's income, so it's plussed. And then the only other item that we still need to adjust is the tax penalties and interest. We can just add them together, they don't need to be separate. And it was 27,000 plus 8,550, giving us a total of 35,550. Right, giving us a PBT of 1,072,750. And that's part 1 of the question done. Hopefully 7 or 8 marks in the bag. That's the end of part 1. The next video is on part 2, which is calculate current tax.